Turn it off in a second. It's still not enough. All right, 12 o'clock. Gonna give this about 30 seconds or so here, and then we're gonna get started. All right, let's do it. Welcome everybody to this week's edition of Derrick's Market Update. It is October 20th. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick, my position disclosure here. I had gotten out of that TZA, which I got into, I think, last week when we were speaking. I still had that position that I got in as a hedge. For the most part, my longs are similar to what they've been, and my shorts are similar to what they've been over the course of the last week, but with a lot of trading around core positions. Short overview on me. I'm a senior trader and registered principal for T3 Trading Group. I have been a licensed professional with T3 Trading Group since 2011. It was T3 Capital the year before that. I've mentored well over 100 professional traders for the company, currently managing a group that is well in excess of 50. In my free time, I like to hike, do martial arts, and go skiing. I went spelunking actually last weekend here in Idaho, which was pretty cool, in the Teton Mountains. Hiked up to the top of this hike that had this big cave in it. Kind of went in there with some flashlights, and then there was a spot that you had to go through where you could only get through on your hands and knees. It was really cool. Probably not if you're claustrophobic, but it was a great experience. The only time I've ever done anything similar to that was when I was at Mount St. Helens, where they have like these big lava tubes that you can actually hike through. Definitely recommend getting out there and checking out the beautiful outdoors that we have here in the United States. It's been a great experience for me to get to travel all around the country while working with my team and trading on a day-to-day basis. So today I'm going to be talking about markets, giving my market update. I'm going to be talking about T3 Trading Group. I'm going to be talking about proprietary trading. I'm going to be talking about retail trading a little bit with the firm. If you have an interest in any of the things that I'm talking about, even though I'm pretty busy, I'm generally a pretty open and friendly person, and I'm always happy to talk about the things that I enjoy, which are first and foremost markets, and happy to talk about the great experience that I've had at T3 over the course of the last decade now. So here's my email address. Feel free to reach out. And now let's get into what we're here to actually talk about, which is charting. All right. Starting with the daily chart, because everything I do needs to start big picture. So we had a lot more volatility here in September and October leading into the election, which is really what we've expected. And it's interesting to note that the SPYs reversed their short intermediate term downtrend in September, broke that to the upside, became a pattern of higher highs and higher lows, actually started to go parabolic here on October 12th. I think we spoke last on October 13th was last Tuesday, my big update. And into this move, really on this day on the 12th and the 13th, just given the degree of extension is one of the big themes that I'm constantly talking about to my team, understanding that markets work in periods of expansion and contraction over time. This was a period of expansion. And the thing about momentum, which is what created this move, and it's momentum that makes a stock extended to the upside or extended to the downside, is it cannot last forever. So one of the big things I'm always trying to do in terms of positioning, especially for my swing trades and my bigger picture stuff, is identify where the market is in terms of extension and equilibrium. So I consider the space between the 8 and 21 EMA to be the equilibrium for any stock or market that I'm looking at. And when I have an 8 EMA that is down here at 343, but I have price action that's getting up to 354, I would say that this market for the SPYs, for this ETF, is extended to the upside by $21. Now, a market that is extended can always become more extended, so you don't want to come in and blindly short it. A great example of that is JKS, right? This JKS Chinese solar company has just had the most incredible move. I know some of my team was talking about this name this morning, and I just said I have no interest in doing anything with JKS here in the upper 70s or $80. I'm not shorting this thing. I'm not jumping in front of the freight train of momentum, but I'm not buying it after this degree of extension here without any type of setup either. So this JKS is a perfect example of a stock or a market that was extended and got even more extended. But eventually, extended stocks and markets need to correct. And there's two ways in which a correction can occur: price and time. So in recognition of this really large 4-day move on this breakout here in the S&P, in recognition of the degree of extension that we now have in this equilibrium area, even though I was still bullish in this area, shorter term, the market's telling me that the move is to pare down my longs and possibly add into shorts. So this is when I started to get into TZA again, right? So TZA is an inverse ETF of the IWM. And all I wanted, so you can see here the IWM, which actually had led us higher. Another big theme worth talking about is relative strength and relative weakness right now with this marketplace. But another big theme to talk about, again, is the relative strength in IWM that created this move up here. And then just shorting it, putting a short on because as a hedge, because I have a lot of other longs on, as I'm pairing off some longs for this thing to time or price correct. My target was just for the IWM to get back to the 80 MA. So basically, my trade was very simple. Market went sideways a bit, price corrected. We had this big gap down last week on the 15th in all the indices, and the IWM gapped down this day to pass the 80 MA. So that's when I was able to work out of that TZA position. So again, going back to the S&P here, it's just about understanding, like, okay, you did a great job initiating longs really at first at these lows, and then adding to those longs in the breakout here. I apologize, I think my mouse just died. I am really sorry, my mouse just died. There it goes, I fixed it. Understanding that I was able to build into good longs down in these areas, get this extended move, and that degree of extension, even if we're going to continue to go higher, the market's telling me I should be booking profit on some of those longs and potentially putting on some short-term shorts. So that's exactly what we did. We caught this move down here. I believe this is Thursday of last week. Then Friday we had a little bit of a pivot high. So we started to build out a wedge here in the SPYs. And that led into yesterday, which, initially on Thursday morning when we closed on Thursday, I'm like, okay, that's it. That's the pullback in this uptrend that has now started in, late September, right? Higher highs and higher lows. Here's the next higher low. And then Friday's price action really didn't confirm that, right? Friday we closed kind of weak. Yesterday we gapped up small. My biggest expectation yesterday morning, I was telling to my team when we were doing the morning meeting yesterday, was for choppy price action. I did not expect pre-market yesterday that we were going to have this big down day. I really thought that we were going to kind of stay in this range and possibly further build out this wedge. And technically, this is still bullish. Obviously, we can talk about there's a lot of other things to be worried about with the election coming up and everything else. But technically, this is a bullish wedge that's building, and I expected it to further build out. What I did not expect yesterday morning was for that to completely fail that quickly and break below this low. Another big area that we were watching on the downside is about 342.50. Which is where the market had previously broken out from. That's the resistance that the market had created, the 342.50 for September and early October. So on this day, this was a perfect pullback Thursday of last week. I thought it created strong buying opportunities to come in and purchase that gap down into equilibrium and into that previous level. But that should be it. It should not be getting back down there and should not be breaking it. So yesterday was concerning. And even though I didn't expect yesterday morning when I was developing my game plans that we would have such a bearish day yesterday, there were some signals out there. The biggest signal for yesterday was in the VIX. So the VIX should be trading inversely correlated to the market. But you can see, so this is today for the VIX, this is yesterday for the VIX. You can see here the SPYs gapped up and traded higher for the first about 15 minutes, whereas the VIX here also gapped up and traded higher right in the beginning of the day. And I actually didn't notice that. It was my team that came in and really provided that information to me early on in the day. And this, by the way, is the importance of working with a strong team. The great thing about my team of traders that I'm working with on a day-to-day basis is that we are all professionals for the most part. Almost everybody in my virtual trading floor room, almost everybody, is a professional trader at the company. And some of these guys are really good. Some of these guys are former fund managers, former pit traders, former floor traders, people with decades of experience. It's not just me in there. And really early on in the day, probably 10 minutes into the day, one of my traders noted to me in the virtual trading floor, it was like, hey, this VIX here is really moving higher as the market is up. And that was, a big initial signal. Now, that type of deviance can happen for a long period of time. By the way, one of several indicators that we were approaching a top here in the beginning of September is that the VIX started to deviate from the market on August 26th. For like 5 days here, the VIX and the market were going up at the same time. So just because the VIX went up yesterday morning and the SPYs went up yesterday morning at the same time, does that mean that the SPYs have to reverse after 15 minutes like they did yesterday? No, it doesn't. Those deviations can last for significant periods of time, but it's something to take notice of. And I wasn't involved in it. My team's best 2 trades of the day, though, were one getting short the SPYs, really right here near the high of the day, recognizing what was going on in the VIX, and the other one was in an individual equity, was in this this MoneyGram that one of my traders has really brought to the table. He first called it out actually on the break of 3:30 on this day when the volume started to come in, and then it set up on this bullish wedge here with the ADMA catching up. I mean, this is just a beautiful, perfect pattern. So the buy of 420 yesterday, a little bit of a cheap stock, but you know, thing moved like $1 from there on 6 cents worth of risk. So that's a great risk reward. But going back to the SPYs, that signal was there, even though the beginning of the day, right? So pre-market, I'm doing all this research. I'm doing my morning meeting to the team at 9 a.m. I'm giving everybody my thought process based on that research, but you have to be flexible. Yesterday morning at 9 a.m., I thought we were probably going to have a tougher, range-bound, less is more type of trading session, erring to the side of the bulls. And it turned out to not be that way at all. But you got to be flexible as the circumstances changes. We started to get that deviation in the VIX that led to this downtrend in the SPYs. And then even here, you know, another thing that we do a great job in the virtual trading floor room is we get the news in there in real time. It looked to me very difficult to call it when you have this grinding type of downtrend. But it looked to me like the SPYs were going to try to put up a fight here now in this area. It was working its way back down to that support again, which is really more like 343. Started to bounce a little bit, got into the moving averages. I thought that maybe we would start kind of ranging out here, similar to what we had done closer to 11, 12 o'clock. And then news hit about the US government implementing further sanctions on China. We got that news out there really quick, and then that gave us the whole next leg to the downside. So that's kind of where the market has been over the course of the last week. So where are we now and what can we expect going forward? So first of all, what I really wanted this morning was for the market to gap down. I didn't get that because after yesterday's really big down move and then the sentiment indicators that we also look at on our team would have had us, you know, in these really prime buying conditions from a sentiment perspective if we could have gotten a gap down. We closed around 342 yesterday in the SPYs. I would have loved an open around 341. We didn't get it. We gapped up this morning, which I thought made things much trickier. We talked about paying attention to 345 on the upside to see if that potentially holds as, you know, some sort of resistance in that area, and it has so far. This market's looking like an inside day in equilibrium, which I think is just really difficult. We were able to read this price action early on this little bull move earlier, but now it's kind of just turned into more or less a little bit of a chop fest. And, you know, we'll see how all that plays out. You know, we have some individual names that we're looking at. You know, we were looking at this CRSR. Unfortunately, this gapped up so big. I wanted to be long versus 20, and it didn't really give the opportunity to. Got a big gap up. I'm looking at SNO. Which I really haven't, you know, looked at or traded really since it actually IPO'd, but SNO has created a really big resistance area around $250. There's been a big seller up there. Every time it gets up there, it keeps getting rejected. This is my 5-minute chart. Yesterday it got rejected. This morning it got rejected. So I'm continuing to watch SNO at around 250 as well. And then we have earnings season coming up, which is always awesome because earnings season gives you a whole host of things that you can actually focus on a day-to-day basis. And that's pretty much it as far as this week's market update goes. I apologize, I'm really having mouse issues right now. There we go, I fixed it. So let's talk a little bit about prop trading with T3. Just going to jump right into it today. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have over 500 professionally licensed accounts. We have these different offices, mainly on the East Coast. I'm typically working out of our Manhattan headquarter office. I live in Manhattan. I live in the East Village. I love where I live, but I haven't been there basically all year because of the COVID situation. Hoping we get the market open. Sorry, the market. The market is open. I'm hoping we get the office open at some point in the near future. As of right now, it's closed. Maybe we can get it open early 2021. Personally, I'm a big skier, so I'm hoping that I can eke out the rest of ski season out here in the West, because there's some amazing skiing out here. But even before COVID hit, probably 60-70% of our traders were remote to begin with access to our virtual trading floor system. And now we have everybody on the virtual trading floor. And like I was saying before, it's just been great. It's been a great community that we've had. The communication has honestly, I think, been better through the virtual trading floor since we closed our offices than what it looked like beforehand. So if you are going to become a professional trader with T3, you have to keep in mind that we are registered and regulated by the SEC and FINRA. So all of our professional traders have to become licensed. There's 2 examinations that you need to pass, the SIE and the Series 57 exams. The way it works is T3 will sponsor you for these exams and will provide you with study materials. If you're saying that, taking exams is not for me, I've been out of college for too long and I don't want to go back to that, I totally understand, then you can contact me about our retail trading accounts that we have. Our edge in retail is direct market access at a low commission cost. We do not sell anyone's orders out to HFT firms like, Citadel or Two Sigma or anybody else, which is what most, if not all, of the online brokerages are doing at this point in time. Once the 57 is passed, then we can get started with training and trading and everything else. We have 3 different software options available: Lightspeed, Sterling Trader Pro, and WEX. The one that I use personally, I typically recommend, is Lightspeed. If you become a retail trader with us, the only option there is Sterling Trader Pro, which is also an excellent professional software. Again, the key there is that you have this direct market access. You are choosing how you route your orders. And there's a large learning curve in learning how to route, for sure. But when you learn it, there's significant benefits to it. You can actually get paid money by the exchanges if you route. For my month of September for my trading, and I'm pretty sure for October as well thus far, I have actually been paid by the exchanges for my own trading as a professional with the firm. So that's obviously great. We have different asset classes. I'm equity focused with the firm. We also have equity options. We have futures. We have options on futures. If you're interested in any of this, reach out. I can speak to myself on it or put you in touch with the right person. And education. Like I was saying before, I have this great community. If you want to be involved with a professional trading community, you should really become a professional trader. I don't really know how else to put it. I'm working with all professionals. I'm not really dealing with many people who are just purchasing a subscription and you don't really know what they're doing and they're not being held accountable for what they're doing. The people that I'm working with are professional traders. They're held accountable for their decisions, and they're literally not even allowed to tell you that they're in a position that they're not in, because that would be a FINRA violation. So work with people that are real, work with people that are pros. You get access to my training program, morning meeting, afternoon meeting, virtual trading floor. Again, we have a really solid group of traders. Once we switch you over to the live account, you are required to commit a capital contribution to back your trading risk. What the firm then does is that we are going to provide you buying power, capital access from the firm at 20 times your contribution for equity day trading and 8 times your contribution for overnight positions. So someone who comes in with $50,000, we basically start by allocating $1 million to work with. We can actually even be flexible with those numbers. If you're an experienced trader, you have a specific strategy that's very buying power intensive, we can really give you access to as much capital as we want. We're just always concerned about the risk. So, if you're an experienced trader, reach out as well. Capital access is one of the biggest edges of being a professional trader. And some of the other edges, though, again, I think are tremendous, which is being involved in this professional community that I keep talking about. And then again, as I was just saying, if you're an experienced trader, You know, you want to come in with a couple $1 million as a capital contribution because you want access to $40 million, we can handle that. So here's my email address, reach out. And you get all this other great free stuff as well. So you get access to my virtual trading floor room, which I guess is about a $2,000 a year value. You get access to my training program, which we don't even have on this spreadsheet. So I don't even know what they consider the value. I consider it to be invaluable, but that's because I made it. You get access to Scott Redler. Scott's great. You know, Scott and I run the trading floor together at our Manhattan office. I've learned a lot from him over the years. I think he's been trading since like the 1990s. Phenomenally intelligent, experienced guy. So you get access to his virtual trading floor room. You get access to his Redler All Access for free as well. So reach out. What are you waiting for? Get involved with the team. We have a lot of really good things going on. You're going to learn a lot by working with us. Here's my email address. Feel free to contact me on anything. I know that this webinar was a little bit shorter than usual, partially because I was having some mouse issues earlier, so I apologize about that. Probably didn't get as many lessons across as I try to do with you guys every week, so we'll pick that up again next week when hopefully my mouse is working a little bit better. And we did get a good solid update though of what the market's doing and some of the positions that we've been looking at. And one of the biggest things that I was looking at today, which has been a little bit of a disappointment thus far, I'm still keeping an eye on, is this DCAN-G, which its lockup expired today. It's gotten beaten up really heavily for like the last 4 or so trading sessions into this. I have a position long right now. So usually, you know, it's just supply and demand, right? So when a company issues a secondary as an example, that's usually bad for the company, bad for the stock, because there is more supply. More supply and equal demand usually means that the stock is going to go lower. Lockup expiration does the same thing. There's countless examples of lockup expirations in the market where the stock gets absolutely destroyed. I remember GoPro. When GoPro IPO'd, it had this massive move because the float was so small before the lockup hit. If you look at a chart of GoPro and you see the all-time high, it's about $100. That all-time high, I believe, is the day in which the lockup expired. All of a sudden, there's a lot more supply, equal demand. Stock went from $100 all the way down to $5 or whatever it's gone down to. But then we've also seen recently some other examples, Snap being most notable, where everyone starts talking about the lockup expiration. It's going to hurt the stock so bad. And then I remember they hit Snap for like 4 or 5 days really heavily in a row into lockup expiration. And this massive lockup expiration happened, which should be bad for the stock in theory. But what did the stock do? It had an amazing update that day. That's kind of what I was looking for from this DraftKings today. So far it's been a little bit disappointing, but I think that you can still potentially be long versus yesterday's low. So we'll see how this one pans out into the close. It just kind of caught a bid a little while ago and now gave a lot of that back. So that's it for today, guys. I appreciate everyone tuning in with me every week. A little bit of a shorter one this week. We'll pick things up again next week. Feel free to reach out to me with any questions about T3, retail accounts, prop accounts, trading in general, skiing, hiking, martial arts. I don't care. Happy to chat. Reach out and have a great day. Bye-bye, everybody.